Darkstar copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
Hey guys, this is Andrew from the Options Millionaire community. Thanks for watching. Today, we're going to be talking about the market coming up for the week of April 18th until April 22nd. This month has proven to be very crucial for the setup for the last half of the year. We're only, 4 months into the year, but we're about 2 months away from the halfway point. And I think this month in the end and into May will define how the rest of the year is going to go. Obviously, we have a lot of headwinds. We've got Russia, we've got quantitative tightening, we've got rate hikes, we've got mortgage rates, we've got bond sell-off, we've got all these things that are tying into the market that are very crucial to the market's future and the stability. And I think there's a lot of cracks starting to form. So I kind of want to go over the charting aspect of this week going forward into this week and figure out where we can kind of go forth and place our entries. All right, so starting out here, we're going to be looking at the SPX monthly chart, and I like to do time frame continuity, going from higher level charts all the way down, squeezing it down until all the way down to the 3-minute chart, honestly. And a lot of people ask me to showcase how I do my analysis starting from doing just that. So I'm going to kind of tie that into this video as well and show you how I start my high level view, and I kind of set my every week with a neutral bias, go in and see what the data shows me and kind of build that into this video. So starting out here, this is the SPX monthly chart. And the first thing to note off the bat is that we have got so far the month of April. This is a monthly candle. This is March. This is February. The month of April so far is an inside candle. Now, if this goes on to close as an inside candle, what an inside candle means is that it's below the highs and above the lows of the prior month. So if this goes on to close as a inside candle, it's only happened 3 other times in the past 3.5 years. It happened January 2019, April 2020, and October 2020. Obviously, the April and October 2020 were crazy months because of the corona rebound, but in all 3 instances, the following month resulted in the candle breaking to the upside. So if this were to close at a candle, in this case, May would break to the upside if it followed that historical trend. Now, that is historical trend. The circumstances and economic conditions are a lot different than in the past in those instances, but it's still an observation on which to have. Also important to note, if you go back to the entire year of 2018, we had a lot of inside months on the monthly and the weekly because it was more of a chop fest downward trending market in 2018 than in the past 3 years. So just different economic conditions, but still data we want to be aware of. I do have some other lines here. I'm not going to address those until we get to the weekly chart, and I'll show you those. But right now, the price is below the 50 MA, and it's above the 200 simple moving average. So these are both simple moving averages. And we're settling here at 43.92. This is a very bearish candle on the monthly so far to note. If you notice, the body of the candle is very much down, and it is not wicking up just yet. We had a little bit of a wick forming, but it's still holding very much to the downside, and we closed SPX on Friday on 43.92. I'm sorry, Thursday, because Friday was closed at 43.92. So let's go ahead and switch over. Right now, yes, it is kind of shifting towards a bearish view, but I don't want to form too much on the monthly chart because this is very much an inside candle. I want to look for a break above or a break below. A break below, obviously noting this, it would be a very, very bearish candle if we were to take out that big downside from March before the big buy up and take that out. If we took that out, it would be a very crucial month, which very well could happen depending on what happens here in tech earnings coming up in April. So let's switch over to the weekly. All right, here we go. Here is the weekly chart. In my opinion, the weekly chart is one of the more important and useful charts out there because it brings in weekly data. And I think weekly data is fantastic for analyzing price action and where the market, the direction the market wants to go. Daily chart is awesome, but obviously that's just one day of data implemented on the charts. This is a week. I think it's fantastic. So on the weekly chart here, definitely more bearish than the monthly chart. And like I said, I want to do time frame continuity against all time frames. So if I get some flow across all the time frames pointing in the right direction, then I can really start to form my thesis. So on the monthly chart, we had an inside bearish candle. On the weekly chart, we have got this definitely a bearish red candle that's popping through the prior lows. If you're a stratter, you know this is a number 2 scenario where it takes out the prior lows of the candle and closes down. The volume on here is a little light for a sell candle. And if you look back on the weekly chart, the charts do not like to have 3 red candles in a row. We had one here, a huge sell-off in January, which we know we all remember that. And we do have some other candles. In fact, we had a 4th candle form, but it quickly bought up on that weekly. We definitely had another instance here where it formed a 3rd red, but then it wicked up. So we do have some potential for another downside before wicking up or buying up, because the market doesn't like to finish closed with 3 weekly red candles in a row. So I was very hesitant to short into the weekend here. Last Friday, I did hold a short over the weekend, and it paid off very, very nicely. I think I ended up netting over 100 ES points that day. Because of this, took out the downside here. We had a very bearish candle on increasing selling volume. It closed below a lot of EMAs, so I was very happy with taking that short. I didn't take one this week because of the uncertainty of the 3rd red candle in a row here. I just didn't want to take that risk. I figured I'd go into Sunday night and then open up some futures trades on the nighttime. But definitely have a bearish candle here. It closed below the 50 simple moving average, which is this light red candle here. I remember for the 50 and the 200, I use the simple moving average. And then for the 8, 21, and 34, which are these, I use the exponential moving averages. It gives me a nice trend. I like using the 200 and the 50. The 200 is way on down here. That is not even a point right now of conversation for the weekly chart. But it is below the 50 on the weekly, which is a very bearish indicator. And if you see, we've only been below the 200 on the weekly, or I'm sorry, the 50 on the weekly a few instances, and we did buy back up, but we just closed the blows on this week. So let's go ahead and flip over to tech. NASDAQ is something that is very crucial for monitoring the S&P because sometimes, especially on a tech-heavy environment like we are in, the NASDAQ likes to wag the dog. The tail wags the dog in this instance. So I want to monitor the NASDAQ right here. And again, we have a very bearish close in the NASDAQ. In fact, we had over 2% red day, finishing 2.3%, you see right here on the NASDAQ. We had a top wick red bearish candle come down, another take out that prior low of the candle, finish down, and now we are attacking the bottom range of this past quarter of the March and then the early February timeframe down here below 14,000. So this is, like I said, this is a very crucial week. We're going into the 3rd week of April. We're starting to approach earnings season for tech, which is, I think, going to be the make or break for the market. I know everyone is expecting huge downside coming up, but no one, of course, knows when, and that includes myself. Who knows if we're going to rage to 5,000 or go to 3,800? But I think this is going to be the flashpoint of the market. April, early May, I think will be the flashpoint to make a bigger move, and we'll kind of talk about that here in a second. But going back to the weekly chart here on the S&P here, like I said, we've got this bearish candle. We've got the volume coming off. We're below the 50 simple moving average. And then I want to go over and show you the SPX charts on my ranges. These are the range calculated that I put on there. These are similar to the SR levels that I calculate on the daily. If you are in the Discord, you see that I post a daily SR levels, support and resistance levels that are very important to our system. I calculated some on a longer time frame here just to show some key levels up and down to prepare for in the upcoming weeks. Not necessarily this coming week, but I'm going to extrapolate the short-term data and the longer-term data. For this week, these two levels are going to be very crucial. If we go back to the upside, 44.79 and below 43.73 are very, very crucial. And then, of course, we've got a little bit longer time frame. If we do start getting crazy, where if we come back outside and we have a reversal candle that takes out the prior highs, this will be a significant level. If we continue down and take out lows, the 42.87 will be very considerable levels going into the later half of the week, early into next week as well. And then beyond that, these are higher time frame, 46.38 and then 42.36 levels here. 42.36, if we take out that level, then most likely we'll at least attack or breach the yearly lows down here. So these two levels, 42.36 and 46.38, are very, very crucial for longer time frame stuff. But I'll be looking right here for the meat and potatoes for this candle right here. And I'll be watching to see how the volume shakes out. So after I do my analysis based on price action and volume, which I've drawn into these levels here, I want to start looking at trends. What are the trend telling me? Yes, we do have a downwards candle here, but this could easily reverse. In fact, you know, the SPX is known to do that. So I don't want to blindly go just based on hoping that we're going to have another downward candle. So what are the trends telling me what we're going to do here? Now, so there's two ways that I like to form trends. I like to do on a weekly to monthly trend, and then I like to form like a long-term 6-month trend to really show me overarching what the market is wanting to do and how it's moving. So first I'm going to do the short-term trend. All I'm going to do is use my trend tool here on the TradingView, and I'm going to do the obvious one here. All I'm going to do is plot these highs. And I'm not much of a pattern trader, as you all know, or if you don't know, I'm not much of a pattern trader. But what I do like to do is form these trends based on the highs and the lows. And that's really all the concrete pattern charting is. So there's that first trend line. On the second one, I'm going to go back to the same time frame and I'm going to form these trends. And I see this one right here. And all this is doing is showing me that we are in a downward trending channel amidst some chop. Yes, it is choppy. The past couple of weeks have been pretty much sideways, but the overall trend here is forming down. Now all that means is we have lower highs and lower lows. And then going out to one more longer term, I want to go out to when we kind of began this chop in May. In May 2021 is when we entered this chop zone. So there's that trend there. What this is telling me is that I've got in the short term this downward channel coming back down towards the longer term trend. We do have this broadening formation forming, which it is higher highs and lower lows, and it's kind of opening up as we go farther. And that just tells me that there's volatile price action forming, which is indicative of a larger move to be made, which ties into the economic data, which ties into what we said at the beginning of the video, is that I am expecting a larger move. If we break out above our longer term target, and what I mean by long term target is, maybe 2 weeks, 2-3 weeks. I don't mean monthly. I mean within the 2-3 weeks. I'll be expecting either one of these to be breached. And once we break out here, I'll be looking to attack the upper 4800s if we do get that breakout, and then do the down to the downside. If we take out this one, we'll breach, and then maybe to potentially complete this trend and touch into the upper 3900s. We've already got very close, 4111. If we breach down to complete the trend, we'll be hitting that upper 3900, lower 4900 range on the long-term trend. On the short-term trend here, if we breached this trend here, we would pop down and complete down to the mid 3900 level, which is very within the realm of possibility, in my opinion, if tech earnings go poorly, or if we have the typical buy into earnings and then sell off the news type event. But I think both of these are very probable. We could very well breach and come up and touch 4900 or fall on down into the 3900 area. And I think these patterns are very valid and based on the price action. But it's just some ways that I like to tie in the price action, the volume, and on the back end, I form trend data. And this is what I've done. A long-term nice trend, almost a year, and then a short-term trend that goes back into a couple of months, 3, 4, 5 months. And before we wrap it up, I want to look at a couple of different outliers too on the market that are really driving the market. It's something to be aware of because honestly, I don't see the bonds being talked about too much, especially on the Twitter sphere and around other online communities that I think is very important. The bonds here, the TLTs, which are what I'm going to use, is at a very crucial level here. They have fallen farther and faster than any other time period in the past 20 years. And under the second highest volume in the past 20 years. And let's go back, you can zoom all the way out, and you can see right here on the historical chart that it's the second highest volume on the bond sell-off here. We've fallen from 179 into that coronavirus recovery peak all the way back down to 120, and we're now toying with 2018 chop area. So we are on a very interesting instance. If I would be very surprised to see the bonds continue to sell off into the lower 100s. That would be a very egregious economic condition. So eventually I am expecting some sort of a bounce in the bonds, even if only temporary, just kind of like we had here, because the bonds are starting to become back into a very low value area and may be a good safe haven for some institutional investors. So keep a close eye on the bonds going into this week, especially. I believe that crash we had on one day this week was like the 8th biggest single day crash on the TLT since its inception. So very interesting items to be aware of and economic conditions to monitor, especially going into rate hike season where we could potentially go 50 and even rumored up to 0.75 basis points of the Fed rate hikes. Outside of that is the 10-year yields. It is something that has been a point of contention for a lot of traders. It spiked all the way up from the very low areas of the coronavirus, and now we're back up to 2.8. There is some trend analysis that you can see that if you were to form a trend line, it's finally broken above the historical trend line on the 10 years, but it's definitely something to want to be aware of. A lot of expecting 3.5, 3.6 potentially on the 10 years, but it's definitely something that we want to be monitoring going into the next month and a half. And one final point I want to talk about is the 30-year mortgage rates. The housing market, I believe, is one of the key indicators of a receding market, or even going into a heavy overall recession, is the mortgage rates in the housing market. Right now, it's currently pinned at 5.07%, which is the fastest climb, the fastest increase in the 30-year fixed in history. It's the fastest has gone from lower to high in history. So we want to be aware of. Obviously, we have very unprecedented economic conditions with the stimulus put in there and the rates going to so low that everybody and their mother were buying and refinancing and HELOCs and all this nonsense. But the rates are over 5, and if they do start trickling towards 7, you're going to see a huge pullback into the already increasing pullback rate of the housing market. In fact, loan applications are already plummeting. Refinance applications are already plummeting just because of the increase in the mortgage rates, and the demand is going down as well. So be watching the mortgage rates as well, in addition to the bonds, to really get a feel for how the market is kind of teetering, whether or not we're going to fall or just kind of chop for the next couple of months. All right, just to summarize here, back on the monthly chart for SPX, I'm going to be really focusing on the monthly chart to get that on time frame continuation, because we do have time frame continuity on the weekly, on the daily charts, and on the lower minute charts for the bearish indication. But the monthly is still kind of neutral. We do have a bearish candle forming, but obviously we still have 2 weeks left in the month. I'm going to be watching closely for this particular level to be taken out. That's our short-term closest bearish target of 43.73. It also kind of corresponds to the prior lows of the bodies for the past 2 months, where we like to consolidate around after the wick. So if we take out that target, I'll be looking for the 42.87, and I'll be a little bit more aggressive on the bearish stance to go to 42.87. And then, of course, if we take that out, I'll be expecting to attack new lows. On the contrary, again, if we go higher and we take out this 45.44 upwards candle, that's my mid target, and then we go upwards and start attacking the prior month, which is March highs, then I'll be looking at maybe we could take out the upper 4,600, lower 4,700s. But it'll be a lot of information coming at us in the next few weeks with tech earnings, which I think is going to be the main highlight. Not to mention we've got FOMC coming up and in May, and then we've got the rate hikes and the quantitative tightening to deal with. So we have a lot of headwinds or potential climbs here coming up, and we need to be very aware. But right now, I'm maintaining a neutral bias until I have the monthly chart completing the 4-chart time frame continuity that I'm looking at, and I'm going to let the monthly chart direct me on to be bullish or bearish. But anyway, that's all I got for you. Thanks for taking the time to watch the video. If you have any comments or questions about the analysis, put them down in the comments of the video. I'd love to hear other perspectives and have a discussion about what we can be expecting this week and the upcoming months. If you haven't already, come over and take a look at the Discord. Fantastic resource for all things educational. That's what separates us from everyone else, is that we focus on education, about teaching and collaborating and learning on how to make money successfully and consistently in this market. Follow me on Twitter, OPTS Millionaire. It's a great resource for me to post a lot of my analysis and comments about the market. And make sure you hit that like and subscribe button so you get notifications for all future content, as well as our Monday, Wednesday, Friday live trading streams. Until next time, I'm Andrew with the Options Millionaire Community, and I'm out.